welcome to Trading Lounge and the gold silver report for the 17th of February. Gold on the weekly chart here, the 38.2% retracement level comes in around here, around the 1700, 1720 mark. And now that the market's breaching the 1800, then it's possible to drop down 100 points to the 17 area here with that where that wave 4 is placed there. So if the 18 becomes a retested resistance, we're going to have a look at a count that can take us down to this little area here like we did yesterday. So yeah, let's go in and take a closer look. We'll look at two different counts here. So this one here, which ends it a little bit shorter, so it's just a simple 3 here, the WXY coming in there for wave 4, and that would be the A wave here, the A, the B wave here, and the C wave here, because that's in 5 waves, and then moving down lower here in 5 waves of 1 and 2, 3 here, that will come down to the 1772 area, have a bit of a bounce, and then come down into the closer to the 1750 area. So basically 1, 2, 3, 4, 5 to finish this off for wave C of Y here. Now if the market moves down lower than this, then we need to have, if the market moves down past those 5 waves and moves down lower here, then we need to rule out the WXY at that point. Okay, and in that instance, the count that we were talking about yesterday, this one here, so looking at this here as wave 1 here, back for wave 2 here, and then wave 1 and 2 here. It didn't pull back as far as I expected it to, but we do have that impulse wave here, and this wave 2 here. We'll just clean this up a little bit. We can see here that it's already sort of bounced around the 1800 here. So the 18 is really quite important. We would expect wave 3 to be longer than wave 1. So normally this little area of support down here for into subgroup 2 here, 65, 72 and 80. And then wave 4 and wave 5 coming into play here. That would just really give us wave 3 at that point. So then we would have a wave 4 and wave 5 taking us down into the 1700 area through here. So that's much more of a bearish count at this point, but just as valid, and that takes us into that 1700 area at that point, which is the 38.2% retracement level area. So a little bit annoying for gold holders, but we're just still working this correction to the downside. So that's how that would play out. So just a bit of a, yeah, we still need this a bit longer here, I'd say, and then wave 4 and wave 5, and this wave 4 here can retrace back to the wave 4 of 1 lesser degree. So in a way, there's not a big difference between the two counts that we looked at. It's just that this one here would be 1, 2, 3, 4, 5 to finish, and that could finish at that point and move up from there. If we note that this is actually a corrective rally here, but overlapping wave structures, then we know that we've got another 5 wave move down into the 1700 thereabouts. So that's it at this point for gold. Okay, we'll check on silver. Just on the daily chart here, we've been looking at silver as a bullish move and a bearish move. So the bearish move would be this, looking at it as the A wave here, then an A and a B and a C wave here for the B wave, then down for one, going back for wave two, which I believe is the case now, and then going down for wave 3, 4 and 5, coming into this space here, and then moving up from that point. So that would be the bullish, the bearish move, and of course you can look to go short under this, under that bar there. Actually, I can just use a green line there. So a nice clean breach of that would put you on the short side. And the bullish count for this, which is looking flimsy now, based on what we're looking at with gold. So the bullish count is looking at this as wave 3 here. There's an A and a B and a C wave here for wave 4. And then looking up here as wave 1 and back for wave 2, then up for wave 1 and back for wave 2. Now, technically it's not damaged until this low here pulls out, but if that's 5 waves here, we don't want this one here to be breached either. So that means that we can go short under this low here, so I'll just keep that a little bit lower there. So if that's breached, that would be the short trade. You could go short under this one here as well. That would probably be fine as well. Yeah, but otherwise it could still be up for 1, back for 2, up for 1, back for 2, and then building to the upside. But as soon as that collapses there, well, then it's all over, rover. So yeah, looking a little bit on the bearish side for now, but it's not confirmed, but it looks like it will be confirmed. So we weren't going to go long until we had the 2,800 as the support as such. We've had some little trades in here, I think, but you need to exit those at this point. Well, certainly if that low there becomes breached at that point. So that's it at this stage. It does look bearish because of gold moving down and just coming back to this count here to recap this one here. So from wave B to wave C here, we'd be looking at 5 waves. So 1, 2, 3, 4, 5. So look, at least it will make a nice short trade if that little low there is breached. That's about the size of it. We're still in this wave 4, unfortunately, but I suppose it does give the silver buyers a better opportunity back here to buy at lower prices. But I also don't see, I don't see what everybody else, what a lot of other people see in, gold and silver going to the moon and Mars and all the rest of it. I just don't see that. I just see that once this wave 4's finished here, then a move up here making a new high, and then a much larger correction at that point. So from here would see some sort of A wave, B wave and C wave coming back into this area through here. And technically speaking, this correction here should technically be bigger than this correction here. I mean, I could be wrong, but that's just the normal way I see things. The other way of looking at this, of course, is that if I'm wrong, it would be that all of this would be wave 1 up to here, then a wave 2 coming back, and then a wave 3, 4 and 5. Now that normally can happen rather than having the classic trading levels pattern of this ABC coming back here. It can push up as 1 and 2 and 3 and 4 and 5, especially when there is a big correction before the level here, because this is not normal. Normally we would have like the arrival, the reaction, the first high above the level, then the ABC. But when there's accumulation and this time is spent here, then it doesn't normally do that over here. It can just continue to move up from that point. So we'll work both counts and we'll check on it. But yeah, just pointing out the two possibilities at that stage. But yeah, look, as it stands, possible short trades on the breach of that low in here for silver. Alrighty, thanks for tuning in. Cheers.